Hello traders, it's John here, Trader Growth. It is Monday, April 1st. We had a phenomenal day trading both gold and oil today off the back of our Sunday study, which was completed and posted yesterday. Let's dive into the chart, see what we were looking at when we were trading, and try and give a little insight on the oil trade today, and maybe this helps you in the future. Let's see. Here we go, guys. So let's jump out to the daily chart. We were talking about anything over the 60 level was a very strong trade. I know that we were way up in the RSI and most traders would start trying to pick reversals. I'm going to tell you that's wrong. The RSI is not a reversal indicator by any stretch of the imagination. It is a relative strength index. Things can remain overbought and oversold for incredible periods of time. They do aid you when you're looking for turning points, but it's more often than not, if your moving averages are going and momentum is going, you should be going with strength of trend. Same thing, MACD's above the zero line. We're way up here. We've got a lot of momentum going on, and it looks like our histogram is developing on today's candle, which is no surprise, some additional strength. We'll jump in on the hourly chart so we can get a little bit better view what we were looking at. Kind of had this double bottom type formation here, which was in previous sessions, and this $60 spot, which is where I have my price level, where I was really interested to see price remain over. Anything over 60.34, which was these previous candles, would have been incredibly bullish. And we'll jump into the 5-minute chart to talk about the setup and how we took it today. We're very overextended at this point, guys. Just as a note, I would not be surprised if we traded off overnight, came back down to a more reasonable level, maybe back in the 60.50, or retested 61 for potential to move higher. Let's go ahead and jump into the 5-minute chart. So here we are on the 5-minute chart, guys, and this is a more standard setup that I use from time to time. I do have other study sets that I use that are more intense that will actually generate signals for me, but to avoid any confusion when doing these videos, I'm going to keep it very simple. So a 13 EMA, a 50 EMA, and a 200 EMA are my moving averages, MACD, RSI, and the volume flow indicator. Everything is exactly the same as our Sunday study video. I am trying my best to not switch things up too much and confuse anyone that's following. This is all overnight price action. Sunday we gapped up as I was doing this Sunday study, and we just continued to trend higher, at which point we stayed above our key price level, which was 60 the entire time, which is the biggest indicator that, okay, prices remained bullish through Sunday session, overnight and Asian session. We've had some pullbacks. Our first pullback was 6:30. Now, I was awake and trading at this point, and I was going to take this move based on the fading histogram, but I didn't like it yet. I don't always like to take first moves early market unless there's a deep V where price really plunges and there's a good value buy for a potential deep V trade. But when we're in this kind of like consolidation, I'd like to wait till we get closer towards New York Open when the liquidity will increase. And you'll see as we get closer towards this 9 o'clock hour, this is really where the bulk of our volume takes place. And that's really where I want to be looking more in this time frame so than earlier in the morning. That doesn't mean that I won't take trades as early as 2 or 3 in the morning if I see a really good level or value that I'm interested in. But let's jump forward here. So we trade up into this 60-80 level, and then we pull back, and this is where I get really, really, really interested. And the reason why I start to get interested, we'll use a little trend line tool here. We'll draw this line, we'll label it white. Okay, so we have a little bit of an ascending price, minor, but there is absolutely an angle on that line. And then we'll come down to our indicator. We'll do a time indication here so you can see through all the indicators the block and period that I'm looking in. We'll take this same line in this same period, and all of a sudden now you can see that there's divergence on our RSI and there's divergence on our MACD. This is a very good indication that something is out of sorts, that there's a good chance that we will catch price and bounce. Divergences aren't perfect, but they're good tools. Another very good tool is your 200 EMA. This for me is my bread and butter. I'm at the $0.50. We've traded this plenty of times before. We're just above the $0.50. We come down, we test a little bit in this candle, the low. was 60.51. So we never really even got below the half dollar. So that's a good test there. And this is right where you got to start getting interested. As prices coming down into the 200 EMA, you have your potential for reversal here based on divergences and just the natural psychological resistances of holes and half dollar moves. The only way, once again, you can really get in on this price action is to have an order out and ready to trade. With that being said, my order is above this candle, so 68 is my fill here. It's a little bit higher than I would like. It really is giving too much back to the market in terms of my entry. But fortunately, I wasn't alone, and then we just skyrocketed higher. I got out here. I only got 35 cents a contract on 5 contracts. That was a quick scalp for me. And I did not, believe it or not, retrade this the rest of the day because I'm currently in gold, and I did not want to over leverage myself. I have 5 contracts short in gold, and I didn't want to take another 5 or 10 contracts in oil and have those 2 positions open. So, and once again here on oil, this 13 EMA, I mean, it's riding it the whole way. The strength of trend here is huge, and for anyone that's an amateur trader, and I don't mean that disrespectfully, I just mean either you don't have the experience or you're just not in a profitable state yet. It's very hard to look at a chart like this and say, let's keep buying. But there's this unknown in the market, or I should say a known in the market, that professional traders and very experienced retail traders understand, guys, is that when price is going higher, it is likely to continue higher. When price is going lower, it's likely to continue lower regardless of the actual number value. If it feels like it's very high to you, it is high, but that doesn't mean that it can't go higher. And that's something that retail traders get trapped in all the time. This is too much. This is too far. Well, tell me why. If the circumstance that got you to that point hasn't changed, there's nearly no reason as to why price should not continue in that same direction. I try and teach our students, and I preach the idea of the path of least resistance. The market is fluid. You have to think of it like water. The market will continue to move in the same direction because there's a lot of people making a lot of money. I've now bought continually on this for probably the last month, and all I'm doing is making money. You would be insane to sell. Now, I'm not saying that you can't sell and sell those pullbacks, but the greater opportunity is with the strength of trend. Had I held that position, I would have been up over a point at this point now, which would have been $1,000 a contract. It would have been a $5,000 day on the oil. So the idea is you're trying to give yourself the biggest opportunity on the smallest risk. And when you're taking these turning points into strong trends, it feels good because it happens very quickly. You know, you get in, you get the money, price falls 30 cents real quick, and you feel like a superstar. But the truth is you captured such a small portion of that move when the greater move is 3, 4, 5, or 10 times that looking back 1 or 2 days later. So you really have to kind of take a step back and realize that price will always continue to trade in the direction it's been trading until it's proven otherwise. And then it will likely trade in a range before it reverses. And then if it reverses, it will, obviously clearly start a trend in the opposite direction. So always err on the side of if it's trending, it will remain trending. If you're in a channel, it will remain in a channel. And that's really 2 big key principles that amateur traders just cannot take to heart. I hope this helped you guys. This is a very quick video for today. I want to try and do a 30 video challenge where I do 30 videos in 30 days. Some of them may be better quality than others, but I would like to try and just keep pushing these out. If you like them, give me a thumbs up, comment, subscribe. I appreciate everyone again. Thank you all very much. Have a great... Thank you guys. Stay hungry and humble. Take care.